The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hey, good afternoon, everyone. Ken Shreve with you. Excuse me. Welcome to another edition of Breakout Investing on TFNN, Tuesday, July 10th. Happy to be with you. Wish we were having a little better day for the market. Kind of an ugly session shaping up here. Quick reminder that Breakout Investing now airs 5 days a week on TFNN from 3 to 4 Eastern. So happy to be with you daily from this point on. David White, who hosts the hour, the Power Trading Hour, is going to be doing Monday, Wednesday, Friday, 2 to 3 Eastern for the end of the month, and then he's going to be going 5 days a week as well, starting in August. Don't forget, you can get my show as a podcast on iTunes, and you can listen to all TFNN programming on your smartphone. You're out for a walk, out for a run. Just type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. Don't forget about Tiger TV on the homepage of tfnn.com. Go ahead and look at charts right along with me as I look at them on the show index charts, stock charts. Channel 1, the show is carried live. Channel 13, it is archived. And you can also watch you can also watch Tiger TV on your handheld device as well. All right, let's take a look at the NASDAQ composite. Wave of selling comes into the market. Big-time stocks near session lows. A pretty ugly session taking shape here. We do have a little volume push behind the move. NASDAQ volume, NYSE volume tracking about 15 to 20% higher than what we saw yesterday. Yesterday we had just over 1.4 billion shares trade on the NASDAQ. We had about 640 million on the New York Stock Exchange. So on pace to come in much higher than that, about 15 to 20% higher. So this is what distribution looks like. This is an unequivocal distribution day for the major averages. Hard to see things changing much by the close, but in this market, who knows? Maybe we rally convincingly off the lows and buyers come in late. But I got to say, with the way that the selling that I've seen in a lot of growth stocks recently, the market's a little bit of a concern here. On my show yesterday, talking about the fact that we did get a buy signal from the market. We've been getting some false starts from the market recently. June 15th, I think it was, we had a buy signal in the NASDAQ composite. It was a very mild buy signal, sort of a begrudging buy signal. Really didn't put a whole lot of stock into it, so to speak. But the one that we got on June 29th was much more significant, I thought. But here again, that one is facing problems too. On June 29th, we had a 3% gain for the NASDAQ composite. We had higher volume. We had a 2.5% gain for the S&P 500, higher volume. Same with the Dow, 2.2%. So it was broad-based. There did seem to be growth names out there ready to assert some leadership. But that's just not looking that good all of a sudden. So we got to adapt and play a little defense here. But let's take a look at the NASDAQ composite. Right now, down 32 points, 1.1% to 2,900, sitting just above its 50-day moving average. That's definitely the line in the sand here. NASDAQ's 50-day line at 2888. 2888. It is at 2,900, so it's only about 12 points above the 50-day moving average. That is a pretty key support level here, and we'll see if it holds or not. Let's take a look at the S&P 500. S&P 500 equally in tough shape. It's down just over 12 points, 0.9% to 1340. 1340, the 50-day moving average for the S&P 500. 1337, so only about 3 points above the 50-day moving average at this point. Market's looking a little bit iffy here, no question about it. So it is not the time to be watching small losses get bigger. Absolutely not. You do not want to get into that position as an individual investor where you're hoping a stock goes back up. I have absolutely zero problems in this type of market environment. If I established 4 new positions in my Ultimate Growth Stocks model portfolio since June 29th. Some are still still working, but some are looking vulnerable here. If I'm down 2, 3, 4% on a purchase price, I will cut that loss loose and I will revisit that stock at a later date. Do not want to run the risk of watching that 2, 3, 4% loss turning into a 10, 20, 30% loss. When you're investing in growth stocks, you have to know how to handle them. You can easily overcome a small loss. A big loss, much more difficult to overcome. So cutting losses short is a key part of my strategy with the Ultimate Growth Stocks newsletter and model portfolio. If you want to check out a 30-day free trial to Ultimate Growth Stocks, you can do that right at TFNN. Go to kenshreve.com. That takes you to my TFNN page, and you can click the green banner and get 30 days free. See how I've been navigating this market recently. See what names I still have in the model portfolio. So that's a look at the NASDAQ Composite and the S&P 500. Why don't we just check on the Dow here for kicks. The Dow Jones Industrial average down about 0.8%, a little more than 100 points to 12,635. You can see the Dow has actually taken out its 50-day moving average here near its session low. So headed into today, since the buy signal on June 29th, distribution has been relatively contained. Downside volume has been very, very light. You really haven't seen meaningful distribution. I would say today is probably the first real day of distribution. So, believe it or not, it's probably still a little too early to completely throw in the towel here and expect more weakness. But it's a bad action today. Bad action in growth stocks. Sellers are still out there. We've been talking about the numerous headwinds that exist. We do have a little better clarity out of Europe, but you still have rising bond yields in Spain, which the market is worrying about. But the real issue for the market right now is this sort of dollar-euro relationship. Let's check in on the dollar index here. And you know what? It's stored alphabetically here. And you know what? I'm just going to go to the UUP because I got so many charts in there and I don't know the abbreviation it's under. But let's check on the UUP. It is flirting with a breakout here. That's the bottom line with the UUP. This is the PowerShares Deutsche Bank US Dollar Index Bullish Fund, basically comprised of a bunch of long US dollar contracts. It is up 0.3% today to 22.95, flirting with a breakout over this 23.02 level. Breakout over 23.02 obviously is not going to be a good sign for the stock market. Could unleash another wave of selling. It it could also get turned away here, so we may not see a breakout for the U.S. dollar index, also UUP. So if we could somehow get some weakness in the U.S. dollar, that could bring some buyers back into the market, but kind of a tough go over right now. So with the market acting weak, growth stocks acting weak, distribution day, professional selling, taking shape today. Let's take a look at some of these short index funds. The SH, this is the ProShares Short S&P 500. This is still a tough buy in my opinion now, because even though the SH is up 1% today to 37.01, it still has a pretty significant resistance level. So buying here at 37, it's still unclear whether or not this is going to be able to, get over its 50-day moving average here at 37.31. So I'd like to see more technical strength, more price strength in the ProShares Short S&P 500 fund before considering a position here. Frankly, I'd like to see it get over about 37.50 before I would have a better feeling that an uptrend was ready to start in this fund, and that really applies to other short index ETFs that I follow. Take a look at the short Russell 2000 fund, RWM. If you just draw a descending trend line here, that's going to take you to, again, right around that 50-day moving average at 27.48. The RWM right now is at 26.68. So it's still about 75 cents below this resistance level. Recent gains have not been coming in a lot of volume, so I just think it's still too early to take a position in one of these short index funds. I'm watching them. The SH, the RWM, and also the QQQ. No, it's not the QQQ. It's the QID. QID ProShares Ultra Short QQQ. This is another one that still is underneath its 50-day moving average. You could buy right here, and then boom, it gets up to that 33.79 level, and it gets turned away because the 50-day is a resistance level. So similar thing here. Probably going to want to see this thing get over 33.75, 34 before I would consider going long the QID. So the short index funds need to show me a little more price strength. We'll see how the market responds to the selling today, tomorrow. A lot of growth names out there that I really thought had potential to lead here. Take a look at eBay. eBay has really fallen apart. I mean, it went from being a good bullish chart to frankly a pretty ugly chart now. So I don't think eBay is buyable here. It may be buyable in the future, but the selling pressure in the stock really is you gotta pay attention to it. Look like eBay on June 18th, June 19th, right in this area here. Good solid base breakout. Nice volume behind the move. This was just a couple days after the NASDAQ Composite flashed a mild buy signal. And then what happens? Hey, the breakout falls flat on its face. eBay down 2.9% today, taking a pretty big hit to 39.49. Looks like volume in eBay is going to come in higher than yesterday. Still not overwhelming downside sell volume in eBay, but just a stock that technically is very weak here. And eBay is not alone. A lot of these what I consider high quality growth names are really under renewed selling pressure. Wasn't that long ago when Amazon.com was getting into position for what looked like a good strong breakout. Amazon today gives up its 50-day moving average, down $5.26, 2.3% to $219.79. Amazon, just a tough deal, below its 50-day moving average. And again, is the market action today? Is the selling in growth stocks surprising? It's a little bit surprising to me because I really thought that buy signal on June 29th was going to amount to something a little more meaningful. It hasn't up to this point. I haven't 100% given up on it yet, but it just goes to show you that when there is still a lot of money on the sidelines that clearly is hesitant to come in, sellers just have an easy time of it. They know that there's still money hesitant to come into this market. There are still headwinds out there. We talked about the strong dollar, the weak euro, and let's not forget about second quarter earnings season. I mean, what we've seen so far has been pretty darn unimpressive. From pre-announcements to weak earnings reports, from companies issuing weak guidance, it just has not been good. And I think the market's perception is that second quarter earnings season could be rough. I hope I'm wrong. I still feel like I want a little bit of long exposure to this market, but right now definitely lightening up and taking my foot off the accelerator. It's today's action is pretty bearish, and leading growth stocks are a great barometer of underlying market health. And on this front, the action, many more bad charts out there now than good charts. All right, folks, headed into the first break. We'll be back in about 4 minutes. Breakout Investing now 5 days a week on TFNN. Ken Shreve with you. We'll be right back.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver. Thank all the listeners that chose to participate, and if lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Ken Shreve with you, checking out the U.S. dollar index here, up 0.3% to 83.41. We had gold today down 0.6% to 1579.80. 1579.80. Checking in on the Spider Gold Trust, we'll see that that is down 1.4% today to 151.92. Turned away again at its 50-day moving average, technically very weak. The GLD and crude oil today took another hit, down 2.4% to 83.91 a barrel. Check in on USO, the U.S. oil fund, one of the most liquid oil ETFs out there. It also has its 50-day moving average at 33.41 to contend with, was on its way to testing that price level. It is down 2% today to 31.51. 31.51 for the USO, and again, the 50-day moving average here at 33.41 looks like it will be a resistance level for now. Talking about some of these growth names under a lot of pressure: eBay, Amazon. You know, you'd have to also include NetSuite. NetSuite isn't widely known, but it is a liquid, high-quality name. NetSuite does something similar to what Salesforce.com does. They're a provider of on-demand customer relationship management software. Mid-cap name is NetSuite, $3.5 billion market cap. But again, you can see just a recent breakout, several up days, nice little uptrend for NetSuite. It broke out over $52 a share. 4 straight days down here. It's down another 2.3% today to $50 a share. Still holding above its 50-day moving average, just above 47, but technically weak as well. So broad-based selling in a variety of names today. Let's check out Buffalo Wild Wings. A lot of growth guys I know still following this name. Bad chart, no question about it. Trading at its session low, down 4.6% today. Just ugliness, ugly chart here. 4.6% decline to 81.60. It is back underneath its 50-day moving average, and 50-day line has been trying to move above the 50-day moving average for quite some time. In May, mid-May, back in June, you can see all these attempts to cross the line are being met with selling pressure. So another day of selling for Buffalo Wild Wings. Of course, the restaurant space in general very tough here. Chipotle Mexican Grill. A lot of people still expecting good bottom line and top line growth, but this stock is just not acting right. When growth stocks don't act right, it just does not make any sense to own them. I don't care if annual earnings at Chipotle are going to continue to grow 20% annually. Fundamentals can look the best at or near a stock's top. Bottom line is there's just been institutional selling in this name. Still holding above its 200-day moving average, but Chipotle under quite a bit of pressure again today, down 1.8% to 379.58. We had Alcoa report earnings after the close last night. Alcoa, not the most relevant of stocks these days. The aluminum giant does officially kick off second quarter earnings season. Just a horrendous day for Alcoa. The stock was mostly unchanged in after hours trading last night. Really wasn't doing much, but it's down 4.6% today to $8.35, pretty much at its session low. This is another broken stock. A lot of value investors are going to try to make money in this thing, and it might be a trading stock, but it's just a stock where fundamentals have been deteriorating for quite some time. Slack demand for aluminum. Alcoa made 6 cents a share. That was down 81% from a year ago. Sales also down 9% to $5.96 billion. So poor day of trading after hitting an intraday high of $8.88. Alcoa near a session low, $8.35, down 4.6%. Taking a look at some other Dow stocks today. Let's take a look at American Express, AXP. Sellers in this one as well, down near its session low, but it's only down 7 cents to 58.34. This was an example of a good base taking shape here. You tend to see, I'll hear a lot of negative headlines in the financial sector, but American Express, good base taking shape here. That base is certainly called into question by today's weak price action. Looks like a heavy volume reversal taking shape here. It is still holding above its 50-day moving average. I think I have a weekly chart for American Express. Yeah, let's take a look at the weekly chart for American Express. But what you have here is a potential cup with handle base taking shape. You've got resistance right around 60. So, stranger things have happened. Maybe this selling is going to be short-lived and buyers are going to come in sooner than expected. Who knows? The market, I don't think anybody has any idea what the market's doing from here. But, not out of the question we could see a breakout in American Express. Not likely, but possible. We'll be right back, folks. Ken Shreve, Breakout Investing.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, he explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Thanks very much for tuning in. 877-927-6648. If you want to give me a call, talk about this market. Let's check in on the market. Why don't we? We've got about 25 minutes left to go in Tuesday's session. Indices still near session lows, and are we getting a little worse here? It looks like it. NASDAQ Composite. Let's check in on the NASDAQ here. We'll see it is down almost close to 40 points now, 1.3%, right at its session low, 28.94. So clearly 50-day moving average is in play here. It's just amazing how fast the market can move these days. I mean, if you're not a trader, you're not fast, you're not nimble, you got to be quick to take 5% profits. You know, it's frankly a type of investing I'm not. I don't like to follow when I buy a stock. I like to hold it for a long time, hold it for a big gain. Almost impossible to do in this type of market, and it's forcing you to be a trader, which is not my preference, but That's the kind of the way things are right now. S&P 500 down close to 15 points, 1.1% to 1338. 1338 for the S&P 500. It's 50-day moving average at 1337. So it's do or die time for both the Nasdaq and S&P 500. Doesn't look like dip buyers are going to be coming in today. Wouldn't be surprised to see finish near session lows, but we'll see how things play out for the next 25 minutes or so. Talked about some story stocks today. Alcoa, lukewarm earnings there. American Express still working on a base. Could try to break out over 60. Earnings coming up for American Express July 18th after the close. Let's pull up a daily chart for American Express again. And I see a nasty reversal taking place in AXB today, but when American Express reports after the close July 18th, earnings expected to be up 2% to $1.09 a share, sales up 6% to $8.1 billion. Take a look at Home Depot, also in the Dow. This has been a real strong performer. Continues to show relative price strength. Stock is only down a penny today to 52.11. Still a lot of support there for Home Depot as it continues to hold above its 50-day moving average at 50.70. Did reverse off its high today, hit an intraday high of 52.75, but this name still looks pretty good in the Dow. Also, other strong Dow performers, AT&T, nice yield there of 4.9%, continuing to show relative price strength. Let's check in on AT&T, and you see probably a bit extended up here. Don't know that I'd want to chase it, but good yield here of 4.9%. Also, Verizon and Walmart continuing to do pretty well in the Dow as well. Let's check in on Intel. This is sort of the Dow segment of the show. Intel in the news today. It took a 15% stake in ASML Holding. ASML makes semiconductor processing equipment used in the fabrication of integrated circuits. I mean, Intel is just as ugly a chart as you could see. I mean, Intel down 2.5% today. I mean, a huge intraday price swing here, down 2.5% to 25.51, trying to hold its 200-day moving average here, but technically a damaged stock. And you know, when I look at a name like Intel, and you know, I came across several charts in the Dow today that actually looked like they were good shorts. Not only Intel, but Cisco I would put in that group as well. Let's check in on Cisco Systems. You can see just very, very bad price performance. Resistance at the 50-day moving average here. Stock down another 1.8% today to 1635. And IBM also very, very weak Dow component. Shares of IBM, just a rotten day for IBM as well, down 2% to 185.78. It found support at its 200-day moving average back in early June. Then it met with resistance at its 50-day moving average, and it has plunged through long-term support here. 200-day moving average at 191. Shares of IBM recently trading around 185.78. So a lot of ugly charts out there. When the market is presenting you with a lot of ugly charts, I don't think these stocks are on sale. If you have a 3 to 5 year outlook and you're willing to put up with some pain, that's one thing. But you just never know when a stock starts heading lower. You just don't know where. Some just don't come back. So that's something to keep in mind when you're watching these small losses get bigger. 2-for-1 stock split from Coca-Cola today. KO split's going to be effective around August 10th to shareholders of record. I think that was July 27th, but shares of Coke today down 9 cents to 77.89. Strong chart in the Dow here as well, holding nicely above its 50-day moving average. Not much in the way of selling pressure in Coca-Cola. Take a look at some other earnings reports today. PriceSmart looked like it was going to be a rough day for PriceSmart. This is often known as the Costco of Latin America. Big short position in Costco. The stock was taking a hit in after-hours trading yesterday, but Looks like a good day of short covering today. Over the past 3 months, short interest in PriceSmart had risen from 1.5 million shares to 2.2 million shares. It has rebounded nicely after hitting an intraday low of $59. Stock is now trading around 66.66, up 5.7%. Numbers were lukewarm. They cited higher earnings were up 2% from a year ago to 52 cents a share. That was below expectations. Sales up 18% to 506.8 million. Same-store sales up 12.9%. So shorts covering their position today in PriceSmart. That's resulted in a 5.7% gain for the stock. Still a broken stock, but a nice day of outperformance for PriceSmart. Let's check in on Helen of Troy. They also had earnings earlier today. Helen of Troy, they make Revlon, Vidal Sassoon hair products, other personal care houseware items. Bad day for Helen of Troy, down 13%. Amazing that stocks can make these moves in one day, but shares down 13.3% to $29.51. Actually, Helen of Troy had been not that far from a 52-week high headed into earnings, but stock down 13% again to $29.51. The story here, earnings down 5% from a year ago to 74 cents a share. The estimate was for 86 cents. That was a big miss. Sales up 12%. Okay, I think I finally got it. Sales up 11% to 300.2 million, slightly above expectations. So Helen of Troy in rough shape. And let's also check in on Mako Surgical, M-A-K-O. Boy, this stock has really come upon hard times. This was a stock several months ago. I was watching. Its technical picture was solid, and then big gap down for the stock in May. Weakness continues today. Loses almost half its value today, 43% to 14.06. They lowered their outlook. This is another robotic surgical firm. Their Rio system is basically used in hip and knee surgeries, but they just are doing less procedures, and they actually cut their Rio sales guidance. They expect to sell 42 to 48 systems this year, down from a previous forecast of 52 to 58 systems. So Mako really getting hit hard. Really, the institutional quality robotic surgical firm is ISRG, and you really have to wonder what earnings from this company are going to look like. Let me just get this chart up here. ISRG down 3.9% today to 529.78. It also gives up its 50-day moving average. And again, all the charts we've been looking at here, especially in some of the growth names in the universe I target, the fact that many of them have given up their 50-day moving average tells me they're ready to base and consolidate gains for a while. Tells me it probably doesn't make sense to have that much exposure to stocks at this point. I mentioned it's still a little bit hard to consider going long a short index ETF like the SH, RWM, QID. They're just now starting to come off bottoms, and I'd like to see a little more price strength. I'd like to see them break out over resistance before I would consider a position in any of the index short ETFs. But so it's a good environment to really be doing nothing right now. The tide seems to be flowing negative, and the amount of ugly charts out there, especially in the growth stock universe, is definitely worth paying attention to. How about the action in Questcor Pharmaceuticals? I mean, this is just downright silly. The stock is up huge yesterday, up about 15% or so. The company comes out with very positive June sales data for its flagship drug, Acthar, and stock has a huge day. Now a bearish report comes out from a company I haven't heard of called Citron, but apparently they can move markets. Shares of Questcor, after a 15% move yesterday, down 21% today. 21% downward move for Questcor. Highly profitable company, great growth prospects here. There was a bad report, and boy, that has really fueled an incredible amount of selling in the stock today, down 21% to 45.43. Would not, just wouldn't go near this name. I mentioned it on the show yesterday, even though it was a big, heavy volume breakout. Was a stock that was already extended in price after a recent breakout, so it wouldn't even have been touched yesterday. Let's take a look at Pandora Media. News on Pandora Media today. Stock is down 3.8% to $9.88. Pandora, the company came out with more listener data. This is internet radio. It said it streamed 1.08 billion hours of music in June, up 77% from June 2011. But growth is decelerating a little bit because the 77% growth is a little bit slower than the 87% year-over-year growth it reported for not only April, but in May as well. Pandora is a company that does show good top-line growth, good sales growth in recent quarters, but still an inconsistent track record of profitability. So this is another broken stock out there that technically is certainly not giving any buy signals here, and a lot of people love the service, but that doesn't necessarily mean you should own the stock. Check in on some other growth names on my radar here. Names I'd like to own at some point, but I got to own these names in the right type of market environment. And you know what? I just don't know that looking at today's market action that we are in the right type of environment to expect growth stocks to move higher, materially outperform. The fresh market still hanging in there. Its chart looks a lot better than a lot of other growth names out there. It is flat on the day, 55.55 after hitting an intraday high of 57.21. But it is not that far from a swing point of $59 a share, still holding above its 50-day moving average. Fresh market still in the early stages of growth, relatively new issue in the market. Obviously, Whole Foods market is another upscale grocer doing quite well, but like I've said in recent weeks, I think fresh market is still a good play in this space. The best time to make money in a stock is during the early stages of being a publicly traded company, and that's where fresh market definitely has the upper hand over Whole Foods at this point. Just a newer company, still in the early stages of growth. Whole Foods market is still growing, but the store base for fresh market should be able to increase more than what Whole Foods is expected to do over the next couple of years. So fresh market, like the company a lot, strong fundamentals, hanging in there pretty well today. Even though it's trading down near its session low, it's getting pulled down with the broad market. Still like the name a lot. Also, VeriSign. Been impressed with how VeriSign has been trading. Up until today, had been holding gains nicely. It's another tech name down near its session low, down 1% or so to 42.99. Still holding well above its 50-day moving average. VeriSign basically provides internet infrastructure services to different networks around the world. Reports earnings on July 26th. Really the week of, I think it's the week of July 23rd is going to be super, super busy in terms of earnings. So start to get a little busier next week, and then each week that comes after that will really get into the heart of earnings season. And again, when you look at the market action today, the very, very poor technical action, not only in the major averages, but in a lot of leading growth names, there clearly is apprehension that we could see some bad earnings reports. And I hope that's not the case, but I always let price and volume in the major averages be my guide. I also let the price and volume action in leading growth stocks also sort of guide my my strategy about whether to be fully invested in the market or not so much invested. Right now, it just doesn't make sense to be having a whole lot of exposure to stocks, especially in light of the weak performance today. So VeriSign still interesting here, coming down 3 days in a row. I don't think it's buyable. I'd just like to see this stock base. It's probably going to base for a little while, move sideways, consolidate gains. Dollar General, DG, this is an extended stock, but a stock that continues to show incredible price strength. You want to be careful about chasing a stock like this, though. Dollar General up 1% today, bucking the trend nicely. Business prospects still good here. Out of all the dollar retailers, Family Dollar, Dollar Tree, Dollar General is clearly the strongest price performer at this point, up 1% to 55.40. Wouldn't chase it up here, though. There's money always going somewhere in a weak environment. You just want to be careful not to chase stocks that have run up a lot without consolidating gains, and Dollar General is definitely extended up here. All right, folks, coming back in about 4 minutes for our last segment. We'll be right back. Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. Let's check in on shares of LinkedIn. Get this ticker symbol right here, LNKD on the NASDAQ. LinkedIn, another stock, looked like it was setting up, had potential to possibly lead this market higher, but a pretty crummy day for LinkedIn as well here, down 3.5% to 99.36. Takes out its 50-day moving average with conviction. Look like handle area forming here. in a cup with handle pattern. Definitely a stock that was on my radar. Volume never really came into it. It recently tried to take out the 108 level, but didn't really get going. So it's another stock that looks like it's a little bit vulnerable here. So it is pretty amazing how good charts can go from looking pretty bullish to pretty bearish in 1 or 2 days' time, but that's sort of the way of the market these days, and it is frustrating. I mean, we have to keep in mind that sometime before now and the end of the year, I truly believe that we are going to get some follow-through here that really does work. But when you get the job growth that we've seen over the past 3 months, you get these negative pre-announcements, you've got a strong dollar, it's really not hard to understand why the market environment is so difficult right now. And during a difficult market environment, it really doesn't make sense to be too aggressive in buying names, whether or not they're defensive stocks or aggressive growth stocks or value stocks. Most stocks are going to follow the trend here, and again, volume on the New York Stock Exchange and NASDAQ today is actually picking up the pace as we head into the close here, tracking about 20% higher than what we saw yesterday. So it does look like unequivocal distribution today. Another day of institutional selling on Wall Street. Let's check in and see where we're at here. Market is trying to come off its lows a little bit. Let's check in on the NASDAQ composite here. The last check, it was down about 0.9%, about 27 points to 29.05. So trying to come off its lows a little bit. Again, the 50-day moving average at 28.88. That is the line in the sand there. And then the S&P 500 also trying to come off its lows just a little bit as we head into the close here. It is down 0.7% to 1336. It's 1342 for the S&P 500. Its 50-day moving average is at 1337. So we will we'll see what how the market responds to higher volume decline today. But not to beat a dead horse, an ugly session, no two ways about it, and even uglier, the action in growth stocks, which are typically a good barometer of market health. If you've got growth stocks that are starting to break down, that is generally problematic and worth paying attention to. Let's take a look at shares of Zillow, still hanging in there okay. Zillow holding above its 50-day moving average. Nice article in Investors Business Daily today about how the company is really seeing a lot of traffic via mobile. A lot of companies having a hard time monetizing. A lot of internet companies having a hard time monetizing mobile. Certainly a big challenge for Facebook. Zillow doing a pretty good job of it. I still like this company a lot, just not sure it's the right time to own the stock now. When new institutional money starts coming in from the sidelines, a lot of them will gravitate to the real strong growth stories in the market, and Zillow has a good growth story, as does LinkedIn. So I'll continue to watch these names, just not a good environment right now for technology. All right, folks, that'll do it for today's show. Earnings coming up tomorrow from Marriott International. Later in the week, earnings from JP Morgan Chase and Wells Fargo. Tomorrow, we've got the release of the Fed minutes, weekly jobless claims on Thursday, and the producer price index on Friday. Have a great afternoon. Coming up next, the Tom O'Brien Show from 4 to 6 Eastern. I'll see you back here tomorrow from 3 to 4 with another edition of Breakout Investing.
Great Basin Gold is a mining company engaged